G'day guys, Tor here from Pro Stock Tips, and today I'll be talking about mineral resources. Now, Macquarie Bank has an $83 price target on mineral resources, and at the current time I'm making this video, the share price is around $56. So that's about 45% upside within the next 12 months, and I believe that they can hit this price target potentially even earlier than that, provided iron ore prices stay positive. Now, the reason why is because they're making a killing on their lithium sales. Essentially, lithium prices are sky high. Sky high. They have a realized price of around 2,000 US dollars per ton for their spodumene concentrate, and it only costs them around about 600 Australian dollars to produce that. So it's a 1,500 US dollars per ton profit margin on the sale of that spodumene. So you can see this important data in their quarterly presentation, quarterly production report. I've pasted the link to that in the description below, so check that out, as well as their investor presentation. Now, that should add up to something around like 190 million Australian dollars potentially for this quarter in terms of profits by my basic calculations. And they've also sold 22 kilotons, which they just happen to have sitting around conveniently at Wodgina for 2,200 US dollars per ton. So there shouldn't be much cost associated with that because it was stockpiled. So that's even better. And that should add up to a sale of around 66 million Australian dollars, according to my basic calculations. Now, obviously, you're going to wait for their financial report to come out to see the accurate numbers. But obviously, the financial report for this year should be quite promising because obviously the lithium prices are sky high. They're making a lot of money on their spodumene sales, and also their iron ore has returned to profitability, which is very exciting. So we should see some really large numbers in their financial report this year in the next few months. And other catalysts for May is their Wodgina plant restart. So they're going to restart Wodgina, which is a very large lithium mine, very similar to Pilgangoora from Pilbara Minerals. So that's going to start up in May, Train 1. So that's a very exciting announcement that should be due out this month. And also their Kemerton hydroxide plant is planning to produce hydroxide in May as well. So there's two very important pieces of news that could be coming out in May that could affect the share price. So also, what else do we know? Check out this slide in the presentation. This shows you the key highlights. Essentially, they're ramping up their spodumene production all the way up to potentially 700 kilotons per annum, which is quite substantial, very substantial actually. So this ramp up should also result in very large increases to their profit and earnings. And also they're planning to produce 100 kilotons of hydroxide, lithium hydroxide that is, within the next 5 years. So that's where a lot of the value is added in that downstream, in that conversion to lithium hydroxide, because as you can see, the price of lithium hydroxide is a lot higher than the prices of spodumene. So this can essentially expand their profit margins. Essentially, they've also made a very large gas discovery, which is quite significant, and they can use this gas to potentially lower the cost of their iron ore production. In terms of their iron ore production, they're also planning the Ashburton project. So this will have a very low cost of production compared to their existing projects. So that's very substantial, a very substantial expansion project, that they're planning. So there's a lot of upside to mineral resources, and I think in the next few years, you would be looking at a price way above $83. This could approach perhaps $200 per ton, per share, not per ton. That's so $200 per share in the next few years once it's brought online all this hydroxide capacity and spodumene capacity, as well as the iron ore expansions, or projects, I should say. So there's a very substantial upside there. Now, the key risks to consider is obviously the iron ore price. There's an outbreak of COVID in China, which could cause a problem for iron ore demand and iron ore prices. And as we saw, last year when the iron ore price plummeted, so did the mineral resources share price. So that's a key risk. However, in the future, the lithium production should outweigh that iron ore price risk, as basically they're very comparable to Pilbara Minerals in terms of market capitalization and in terms of basically their production as well. Their production profile is also quite comparable to, if not better, than Pilbara Minerals, which doesn't even have as much hydroxide capacity planned. So, and essentially PLS is further away from hydroxide production than Mineral Resources, which is going to be producing hydroxide in May, hopefully. So essentially their share price should be supported by the lithium production. Now, another key risk could be downside prices to lithium. Essentially, as these guys ramp up their production, as well as other manufacturers ramp up their production of lithium, this could, decrease the deficit, right, in the demand for lithium, which could bring down the price of lithium, which could then dampen investor enthusiasm for lithium stocks. However, lithium stock prices should remain at quite a substantial profit margin for these guys. So I don't see too much risk from lithium price downtrend for a existing producer like Mineral Resources, which is ramping up and taking advantage of these high lithium prices as we speak. So I think that the Mineral Resources share price should be supported by the lithium alone, even if iron ore prices were to come down. So any other important things to consider? Also keep in mind that they don't own 100% of these lithium projects. They have joint ventures where it's around about 60-40 split or 50-50 split. So keep that in mind when you evaluate Mineral Resources potential. But essentially, that's still a lot of capacity in terms of spodumene production and lithium hydroxide production. So thanks for watching, guys, and good luck with your Mineral Resources investment if you choose to invest. Thank you.